Hello and a very warm welcome to our panel on, yes, slight giggles in the audience there because it is very warm here. Very warm welcome to our panel on nature finance. This is going to be a quick, rapid fire tour on nature finance. And I think one of the reasons that we wanted to cover this topic, it is being discussed more and more today. It is a moral obligation and a strategic obligation to think about how we preserve nature, how we restore nature, and how we incorporate it into our financial systems and our economies globally. My name's Jill Lofts. I look after sustainability for EY in the financial services sector. And obviously, I'm sure all of you know that a significant proportion of GDP depends on nature. In addition, there are estimates suggest that the decline of pollinators could alone cost the global economy up to $500 billion annually. EY recently undertook a nature action barometer, which is where we look at publicly available information, what firms have published around nature. So this is our 2025 study. The latest Global Nature Action Barometer looks at disclosures from 435 companies across different sectors and regions. And we found that 93% of companies now reference nature in their public disclosures, which is fabulous. But sadly, only 26% align with TNFD recommendations. The most advanced sectors are consumer goods, extractives and minerals, and food and beverage, which we probably wouldn't find a surprise. But less than 3% of companies have stated goals with a nature-positive ambition. Interestingly, governance is one of the strongest pillars that we observed from the disclosures. So I just wanted to set the scene by giving a few examples in terms of the state of corporates today. Let me take the opportunity now to introduce you to our amazing panel. We have Constance Châtelet, Chief Sustainability Officer at BNP Paribas Global Markets. Welcome, Constance. Butch Bakani, UNEP FIS Head of Insurance and leader of UN Principles for Sustainable Insurance. We have Christiane Roldorf, Chief Sustainability Officer at KfW DEG. And last but by no means least, Naoko Ishii, who is former Deputy Vice Minister of Finance of Japan, Professor and Executive Vice President of the University of Tokyo. And I will allow them, when they introduce themselves, to say a little bit more about their role and the work that they're doing. But maybe, Constance, I can kick off with you. Why do you think that nature finance matters now? And what do you think is at stake if we fail to act?
So I think we've heard a lot this week, the interdependency between climate change and nature. Climate change degrades ecosystem, while healthy ecosystem can really contribute to mitigate climate change. So it's absolutely linked, and I think this year particularly, we are seeing investors starting to understand this. It used to be nature finance was a niche type of asset class. Very clearly this year, it is going to scale, but probably not at the pace where we would like it to go. So basically, we see today 4 main barriers. The first one is some misalignment between public and private interests. Today, there's way too many companies who are degrading nature daily in their activities, and there's no policy to incentivize them to do it otherwise. Secondly, it's project fragmentation. So I spent the last 2 days meeting with off-takers of nature-based solutions saying, you know, we cannot act each of us on our side. We need to ally forces and finance together at scale some projects. But the fragmentation is a real issue. The third is really a risk-reward calibration. Today, unfortunately, the private investor world operates on short return cycles.
Yeah.
And nature projects deliver broad societal benefits with limited direct cash flows, especially at the beginning, making it very hard to finance for a regular investor. Even investors do not know where it should land, in which portfolio it should land. And I think the fourth gap is really capacity gap. We see so many people with amazing projects, literally very inspiring, and they know exactly what to do, and they're doing it right. But they don't know how to present it, how to convince, how to attract investors. So,
thank you very much. Naoka, let's go to you. And I know that you've been doing a lot of work. Sorry, for you, yes. As part of the Nature on Balance Sheet initiative, which you lead alongside others, Capitals Coalition, Systemique, and Land Banking Group, you aim to make nature a recognized asset in business and financial accounting. I've clearly outlined, our perspective on the state today. Perhaps you can say, what do you think are the most critical steps to be able to recognize nature on balance sheets and in corporates?
Yeah, thank you for having me here. Fundamentally, the challenge is natural capital is not really accounted for its full value, and the current valuation system doesn't take it.
Yeah.
Then the current economic system doesn't take it as a critical the capital. So how we could really change it so that the financial the sector, the every part of the decision maker of the entire economic system can really take the nature as based on the decision making. This notion came from actually the time the CEO of the GEF for 8 years. We have done so many nice small projects, nature projects, fragmented everywhere in the world. And these things, even if they are all satisfactory, they don't adapt to the system change. That gives me the sense that we need to really go to the fundamental problem, which is accounting system, but it's not only natural capital accounting. We have done a lot already, TNFD, that ISO and ISSB. The challenge is how you can do this natural capital accounting to the balance sheet. That's the name of this initiative. Then the few important steps is that there are two important groups we need to mobilize, even if we do this natural capital accounting. One is that the financial sector people, how you can see that the natural capital be an important part of the decision making. We really need to know from financial sector that what are the key decision lever to recognize the nature, not only from risk part of view, but also the financial investable that an asset, that what do you need from us. But the second part is that we need to really change the incentive and the disincentive system, how to internalize the externalities. Here, that the regulators important, Ministry of Finance important, central bank are important, how to change the signal, but also how to create a better regulatory system to make that the nature as a kind of the important asset. So that's something we are working on.
Brilliant, thank you. And we will revisit that. Before we do, a little bit of, I guess, positivity and boots on the ground. Constance, let me come back to you. Can we talk about ways in which you have seen the incentive, the benefit, ways in which BNP has invested and lent to, etc., in terms of nature assets?
there's many ways. I think the first way is really direct financing. And we've been very active either in financing direct biodiversity positive projects, Very often we bank some clients who are industrial clients. They would degrade some sites and they need to put back the site into a state which is really not only positive but also adding co-benefits. And there we would intervene in direct financing. But very often where we really have leverage is when we are able to arrange financing under the form of bonds, for example, of loans for our clients, because it's not only us, we have limited balance sheet capacity, it's really working alongside with our clients. And one example of this is typically a recent French Treasury green bond emission, where a very big part of the 8 billion was dedicated to protecting biodiversity and nature. So it's a very concrete example. Another example where we advise clients when there's not enough green capex for the clients is to rely on sustainability-linked solution or nature-linked loans. And there we're incentivizing the client to do better. One example I have in mind is Elia Transmission Belgium. They have electricity transmission lines. And what they realize is under their lines, there's a lot of land. So they decided really to try to embark into a project where by 2030, 90% of the land under the transmissions are really eco-managed to protect biodiversity. And that's super interesting because we're talking to a player which is not a nature player. We're talking about someone who's very industrial. What they're doing while they're doing this is they're increasing their resilience and increasing the lines that is connecting everyone, but at the same time, they're aware of the fact that they can do more. So I think those two examples, before even getting to blended finance, because I'm sure you'll ask me that question later, those two examples, direct financing on our side, but also supporting our clients, either through bond or loans, is really good examples.
No, thank you. I think the point around, as you say, without talking about, let's say, blended finance, but the idea of firms that you might not associate having a nature impact, starting to actually think about, exactly to your point, Naoko, how is it meaningful to them in a financial way, and what do they need to do? Butch, let's turn to you. I know you've done a lot of work in the insurance sector, and I think one of the things that we have heard a lot about is how insurance really can help with nature finance, and probably not always brought in a timely fashion, maybe sometimes a little bit of an afterthought, but maybe you can also paint a bit of a picture and give us your thoughts around some examples, some tangible examples of where this has worked well.
Can I start first with a compelling reason on why we need to protect and restore nature? So first, it's great that you asked a question about nature finance, because when people talk about finance, they don't mean insurance. They mean lending and investment. So we already know the moral and existential reasons why. I'll give you a practical reason why we need to do that in an insurance context. So at UNAP, I lead two initiatives: the Principles for Stable Insurance, the largest collaborative initiative between the UN and the global insurance industry, and the UN Forum for Insurance Transition, which is made up of insurers, insurance regulators, civil society, and academia, or the FIT. Last Friday, we issued a COP30 insurance communique saying that there is a looming global insurability crisis. This is the 9th straight year that economic losses from natural disasters have exceeded $300 billion US. And last year it was 360 billion, and only 40% of that is insured. So 60% is uninsured. We know the reasons why. The reasons are we haven't reduced emissions enough, so the emissions gap. We haven't adapted well enough, the adaptation gap, and we've destroyed and degraded life-supporting ecosystems that build our climate resilience. So those are the three factors. Why is that important? Because for many years, insurance has been a silent cornerstone of financial stability. But now, that's not anymore a global south conversation. Chronic and acute lack of access to insurance, it's not anymore in developing countries. It's now happening in Lismore in Australia, in California, and in London and Manchester. So what happens when things are uninsurable? They are not bankable. They are not investable. So the insurance system is showing cracks there because which bank will issue a mortgage or a loan to property that's uninsurable? Then you have a crack in financial stability. So I hope that's crystal clear to everyone that if this continues, we will have a global insurability crisis that will lead to climate and nature-induced credit crunch that will affect the core stability of the financial system. That is what's at stake from a practical reason. So I can add more on what we can do. Do you want me to do that now?
Yeah, give
All
me
right,
be
okay.
positive.
Okay.
So that I think that's
Okay.
an amazing 3 sets of points,
Yeah.
and I think we all agree with you.
Now that
Tell me something good.
good. Now that you're convinced that that communities and economies need to be insurable, to be bankable, investable. Now we need to see how can we turn the corner. What
Yeah,
are the
yeah.
levers for insurers? Before I go to for climate, there's analogy on climate and nature for me. When people talk about climate solutions, it's all about renewables, green hydrogen, etc. That's all good, and that's fine also for nature-based solutions. We have to start with levers that are destroying nature. So, for example, deforestation, oil and gas, extractives, illegal, unreported, and unregulated fishing. For many years, a lot of those activities were insured. Increasingly now, insurers are having underwriting policies saying, we're going to be looking at those things. Well, so there's like on climate, there's now many insurers having a fossil fuel underwriting policy. First, do no harm, right? Second, engaging. If all insurers are investors, but not all investors are insurers. So if an insurer as an investor can engage with a corporate client and say, you need to adjust your business models, nature positive, you can do that as well in insurance with corporate clients. So that lever is also being used increasingly by insurers to engage with corporate clients who may have nature negative business models. And then the insurance solution part. So
Yeah.
increasingly, there's more and more insurers who are choosing to go into innovative insurance schemes that support nature. So, for example, insurance for coral reefs in Latin America. So the Mesoamerican reef, it's quite popular already that there's a vested interest for the reefs to be insured because if they're damaged by hurricanes, all the hotels by the coast of Cancun will be affected by storm surge. You can apply the same logic on mangrove forests in Southeast Asia. I'm from the Philippines, so I know how much mangrove forests are going to be very important in terms of buffering storm surge. And you know in the news that we've been battered by, I've lost count of super typhoons in the past couple of weeks.
Yeah.
So
Yeah.
making sure that we are able to insure those are important solutions as well to the discussion. And there's one more thing that people forget when about insurance. Can anyone give me an estimate of how much in dollars the insurance industry pays annually on claims? Anyone who can give a good figure?
I don't know.
It's roughly 5 to 5.5 trillion US dollars. So if you rebuild using unsustainable materials, which put more stress on nature, can you imagine how much that contributes to further stress?
Yeah.
If you repair instead of replace, if you build back greener, not just build back better, and that's not just for construction, that applies to life and health insurers who pay for hospitalization and carbon and nature intensive resources. Have I convinced you of things?
Yes, and there were a lot of concepts there, so thank you for that, Butch. Let me go to Christiane, and maybe I know you do a lot of work with emerging markets and developed economies. I know you look at nature finance and funding. Perhaps you could talk a little bit about your activities and describe a few projects that you have invested in.
Thank you. So let me start with a couple of examples to motivate us, but then also look a little bit on what needs to be changed in order to scale. So coming back to the insurance industry, we signed on Friday with AXA, a Natural Capital Opportunities Fund of 150 million US dollars. So there's an increasingly number, despite all the challenges investors face, an increasingly number of private investors looking in the field of nature finance. So we work with specialized funds. We also work with the agribusiness industry that more goes to their supply chain into agroforest, creating carbon credits through a new agroforestry approach. But I think in order to unlock the potential, it's important also to reach ordinary, normal business and invite them to look beyond their current business models. And just to give you one example, I think in this tropical room here, we would all deserve a cold beer. But BSDG, we financed the largest brewery in Nicaragua, and we started with them in the normal way. Took them on a resource efficiency program, helped them invest into renewable energy. But at a certain point in time, the management of the brewery came, okay, I want to become net zero. And then they realized that they have land available that they can reforest. So they now started a reforestation program and can sell carbons and have an additional income. So what we increasingly see, especially in the emerging markets, is that ordinary business models need to look beyond it and see how they can unlock, also to become more resilient with their own business model.
Yes, thank you. And we are now slightly challenged with not only some quite loud voices, but some music. But anyway, we will plug on. Thank you for that. And before we started, we were also talking, weren't we, about the financial risk models and how they need to evolve and, I guess, be better understood by a broader community globally.
Yeah, and I think when we talk about nature finance, it's a young, a volatile market, and this initiative is very important. So how do you convince a chief risk officer? How do you convince a chief financial officer to invest in this segment? How much risk do you take? What does it make with your balance sheet, not knowing what the carbon price is in 5 years' time?
Yes.
So that's the real challenges for both institutional investors, but also for an ordinary businessman looking into that. And so we need more reliability, we need more security, and you mentioned blended finance. So not necessarily blended finance, but some guarantee scheme or some support from the regulators to help on the balance sheet side in order to hit the cracks that you just mentioned. Because otherwise it's very difficult to scale, even for us as a promotional bank. The discussion we have with our chief risk officer on whether we can increase the limit on nature finance within our portfolios.
Yes.
They are really tough, and this needs to be changed.
Thank you. Yeah, and I mean, Naoko, let me come back to you. So a very important initiative that you're involved in. I think we have talked about across the panel how this is relatively nascent. So I guess data's a problem, which clearly is part of the issue in terms of, what you're trying to fix. But I guess if we, how long can we wait? And maybe what are some of the short-term actions that you can think of? We will be evolving, let's say reporting and disclosures, putting nature on the balance sheet, evolving the solutions. But from a short-term perspective, what do you think we need?
Well, if I may challenge that question, there is no short-time quick fix, because what we are fighting against is an incumbent system. There is no quick solution. That's a thing. So my take from your question is, the challenge is actually it's a system coordination, system orchestration, system curation project, because each one of the professional industries, either institutional investors, ordinary investors, people along the value chain, the regulators and the credit agencies, the rating agencies, that finance ministry, the central bank, those kind of regulators, everybody needs to step outside their comfort zone and see how we can work together to achieve that mid-term goal. So that I found it challenging. It's really that how to collectively create this coalition of the crazy professionals. That's what we are trying to do. So that if you could actually join us, that if you are be the crazy, that the courageous leaders, and if you are ready to work with us, that's going to be the way to go.
Love it. And I think really important, you know, we've talked about policy and government, okay? We've talked about the private sector and about finance. Clearly, we need to include civil societies, NGOs, and of course, academia. So it's a complex community to manage. I'm going to go to Butch just to get some reflections from you. I know you've covered quite a few things already, but, and again, I'm not trying to squeeze us into a tell me what to do in 12 months when that's impossible. Well, I guess what I'm trying to get us to contemplate is if we were to be sitting here in 12 months' time, what might good progress look like? And maybe you could say from the insurance sector, Butch.
Yes, so I think for insurers, even though they can do a lot, they can do so much more. So maybe over a decade ago, I was with a room full of insurers and catastrophe risk model vendors. I asked them, these are world-leading companies, how much of your models have embedded nature there?
Yeah.
The answer was 0.
Yes. Yeah.
So now, increasingly, if 12 months' time, if insurers have embedded all the value of nature, even on one value,
Yes.
risk reduction value,
Yes.
we would have gone a long way. Why is that important? Because that understanding risk and embedding it into your core risk management, risk analytical frameworks is the key to scaling the opportunities for you as an insurer. If you do not understand what nature's value and benefits are, then you won't be able to harness the full potential of risk-sharing products and risk transfer solutions that are needed to help the transition happen. So that's exactly what we're trying to do. We are looking at nature not only from a product perspective, but from a portfolio-wide perspective.
Yes.
Insurers have to look at, if you have 1% of your underwriting portfolio or insurance portfolio being nature positive and the rest are 99%, it's going to be a disaster, right, in 12 months' time. So, but if you're looking at portfolio, if you're seeing that as a shift, and this cannot be a paper, it has to be a link to changing the real economy. So that means anything that you're doing across your portfolio to make it more nature positive has to turn to real economy positive outcomes, changing clients' trajectory on nature and business models, and supporting that transition through a range of products. We would go farther on this agenda. And the key benefit is that I think you mentioned the word de-risking. Once insurance is in place for many of these investments, that will attract the private finance to come in with greater confidence. But bankers and investors won't be so confident if insurers are not willing to underwrite things.
Yeah, exactly. Brilliant. Thank you so much for that. Let me turn to Christiane. Maybe similar question to you. As you look at the financing that you do, what do you think would make the biggest impact over the next kind of 12 months?
I do think we need to start with ourselves. Yeah, so Getting
Yes.
the banker a little bit out of the comfort zone,
Yes.
yeah,
Yes.
and thinking a little bit longer term, because then it changes your view on margins and on risks. So I do think, again, start at home, I think would be my first message, although as Chief Sustainability Officer I try, but nevertheless I think that's really important. And we as DEG, we have developed a transformation path, so we accompany our clients on their transformation and kickstart this earlier in our discussions with the client. What can you change in your business model?
Yes.
What does it change for the financing? So get more kick-started also in the client relationship and find out how they can change, because this is also an opportunity for us as financiers, because when they change, we can finance it also to change. So
exactly.
finance the change would be important for me.
Brilliant, thank you. Constance, maybe we can have a final word from you on this.
Yeah, so I want to give you a message of hope, I would say.
Okay,
I think
great.
we have amazing Lego bricks. Each of us represent an amazing Lego brick. And I want to tell you a story. So last July, I went to do the due diligence of the Coral bond project we have with the IFC in Raja Ampat. And I'm spending time with the MPA management unit, and there's academia, like an amazing teacher about corals. There were scientists that were stress testing new breeds of coral to make them resilient to 35 or 40 degrees, to make that insurable. There were NGOs that were reforesting coral areas to test them. We had insurance coming to see, okay, how can they step in? We have an amazing tool, which is carbon credits. When they're used with high integrity, it works. And we are seeing a lot of momentum from 2023 to 2024, retirement tripled or quadrupled. So we have all those bricks. And we have investors like you who are able to make massive investment in the AXA IM Arts nature-based fund. And that's a very strong signal, because it's shifting the debate between nature being niche to it's becoming mainstream. It's an investable asset. So now it's how do we combine those Lego bricks in a way which is inventive, in a way which is pragmatic, because very often better is the enemy of good, and in the way where we are not used to working with each other, to be quite frank. We don't even know each other, which is unfortunate. So I think there are instruments in the market that work. I'm not so keen on debt for nature swap, because then they end up in a balance sheet of the bank. You're stuck with it, you can't de-risk. There is outcome bonds. The market of bonds, the beauty of capital markets, it's great to scale up. You can issue, it's de-risk, it's distributed across many investors on the planet, and you keep on issuing. So today we have an amazing project, outcome bonds. What they do is, the World Bank, for example, issues a bond. It's a AAA, so investors get paid minimum 4% coupons. But they're foregoing the coupon for the first few years to finance a project. And if results are met, investors not only get back all their coupons, plus a pay for performance. If the results are not met, they get back just their coupons minus 10 bips. So as an investor, you know that you're going to get either 4% or 4.3%. But you're contributing to truly doing good. You know the instrument. It's not a massive risk. And there is a very strong story to this. And they know where to put it in the portfolio. So today we're very, very involved in outcome bond, because for us, it's a way to scale up massively in a way which is really regionally specific and which is really fostering transparency and results. So fingers crossed.
Great.
But we will need all of you.
Thank you so much for that. And we do need to wrap up now, just because of commitments of our panelists. But I think a really fascinating discussion, and thank you all for your excellent remarks and examples. I guess we can't expect any quick solutions. We can rely on some of the good things that we're doing already, but I think it's fair to say that, you know, in the panel, we do need innovation and we do need new collaborations. Because what we're looking at here is the moral and the human implications of nature and building that and thinking how that impacts through the financial system. So listen, a huge round of applause and thank you very much to our esteemed panel.